Stephen, talk to me about those two headlines that I think are on a lot of people's minds. The idea that vol is so low and the equity market is so high. Walk me through it.
Well, it is an uncomfortable calm. I would bear in mind that markets have feared shocks. There were known catalysts that could have turned out negative. Risks to the Eurozone from the French election, with one candidate campaigning for essentially the breakup of the main two partners of the Eurozone, and it didn't occur. Then you think about the next part of your question in terms of markets trading high. U.S. earnings in the first quarter have grown about 15% from a year ago. Now, we know that some part of that won't follow through in every single quarter this year, but this is going to be a year where EPS in the United States could grow double digits. And we see signs in other regions, in Asia, for example, where international trade indicators are picking up, which tend to lead earnings. So this is a strengthening earnings environment, and there's been an absence of shocks. Now, so that gives you to the point where you get low volatility, and then we can think about what happens next. And the summer months have been known to have these short, if temporary, corrections.
Well, Stephen, let's talk about that. We've had guests come on this program for months and months now saying, buy vol, it's low, buy vol, it's low. They've wasted their money, haven't they, given how low realized vol has actually been?
Well, I think you have to take advantage of the fact at times that if someone is going to offer you an insurance policy exceptionally cheaply, you actually don't hope that you're going to have some disaster and claim the insurance. But I think that's one of those times now where vol is at an extremely low level, and the seasonal period we're going into, this middle point of the year, tends to be periods where vol spikes are more common. When you do get a spike, you should remember that it comes down even faster than asset markets rebalance to the upside. So when volatility is very high, it's an opportunity to generate income in portfolios. But that's clearly, in the case of U.S. equities, not the case right now.
Stephen, I wonder whether we're misunderstanding vol and what causes volatility, actually. Because if you go back 11 months now, about 11 months ago, we had Brexit, right? We had Brexit, we had the election of President Trump, we had the French elections like that. And the volatility really didn't react so much to those events. So maybe volatility doesn't really trigger off of geopolitical and particularly political events as it does over things like central bank activity.
Well, take a look at what happened to asset prices. In all of these cases, you know, investors have been trained to buy on political risks in particular. I'm not sure that's always going to work, but you saw asset markets calm down pretty quickly, so volatility did as well. I do think that this issue on central banks will be a volatility driver at some point in the future. I don't think that the Federal Reserve is so suddenly going to give up its aims on monetary policy in order to shrink its balance sheet. The balance sheet is a secondary issue. Determining the right course for monetary policy is first. But as we've seen in the last 8 years, each time the Federal Reserve has moved from one regime to the other in terms of easing or tightening campaigns, there have been temporary spikes up in volatility around that, and that could easily come this year.
Is the very size of the balance sheets, not just for the Federal Reserve, but for other major central banks, is that in itself suppressing volatility?
I think you could make the case for that in the case of Europe and Japan, where balance sheets are much larger as a share of the economy, and markets outside of capital markets are in many cases smaller. So you see banking activity and being very important there. So much smaller capital markets with a larger central bank balance sheet. In the case of Europe, an inability in some cases to purchase all of the bonds that they've planned to. You know, these are the kinds of issues where it's more of a barrier.